Morning, everyone. It's the 8th of March. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Good morning, Steve.
Good morning.
How you doing?
Yeah, not too bad.
Happy back to school day to all those viewers out there as well. Getting there.
Connor's not happy. He's got to go back to college today.
Oh, poor Con. There he is. All right, Con. Yeah, fantastic news in the Neighbour household, that's for sure. And
Yeah, I bet.
happy International Women's Day as well.
Oh, fantastic.
To any women that are watching. Don't know how many we get viewing.
I don't think many of them find this interesting, Joe. I think we're probably
much like the women in my own house.
Even the women dogs don't find me interesting.
No, same here. Okay, so over the weekend we saw, or first thing this morning, we saw Brent crude oil futures rise above $70 a barrel for the first time since January last year. One of the key Saudi sites came under attack on Sunday, and the Iranian-backed Houthi rebels in Yemen claimed an assault on the Ras Tanura export terminal, which has a capacity for matching nearly 7% of global demand. So pretty serious. However, assaults are rare. They rarely cause any extensive damage. So nothing much, I think, has been done in terms of damage to the site. But of course, it will mean that tensions are rising, and that is always bullish for oil prices. We'll come on to charts on that shortly. Elsewhere, the news about the stimulus in the US looks as though it's going to pass. It got the Senate. The Senate passed it yesterday, 50 votes to 49. So there will obviously be plenty of chat going on about that throughout today as they look to get that signed, sealed, and delivered.
Signed, sealed, delivered.
Yeah, I mean, equity markets have dipped off a little bit on the this morning. I guess we'll have a quick look at some of those charts now, Steve. If you've got anything ready,
yeah, of course, yeah. I'll go through Ftse first. You can see that, as Joe said this morning, we've had a little bit of it started off quite nice and rosy. This is last night's price action. Market opens at 11 o'clock UK time. Nice little start, 67, around 67.10 the open, spike up to 67.40. But since then we've had a 90-point reversal, and it's pretty much the same across the board. Had a nice little spike up on the open, very positive news, and it's quickly dissipated. Same with CAC, and obviously the US indices as well, all the same story there. Now Nasdaq as well, that sort of formed a nice little shooting star candle there. Let's see that, 11 o'clock, bang, sell off. So I don't really think the market's going to take as much relief from this news as maybe some people expected. I'd like to sort of focus a little bit on the Nasdaq. This has been obviously the indices, full of tech stocks, which has seen the unbelievable rally over the last year nearly. If we think about it, the low was the week of March the 23rd, and wow, where have we gone from there when everything looks so dire? At that point, when we've seen limit downs every day and spikes all over the place. So we've definitely seen a top for the short term anyway. This bearish outside candle on the weekly chart signaled it. We talked about it back then, and the sell-off has extended lower. This bullish channel had a bit of a retest last week and failed miserably, and also broke below the previous swing low from the previous nearly 8 weeks. So 12,700, a bit of a line in the sand, and obviously we've touched upon it this morning. And well, what was the high this morning? 12,765. I mean, that's a pretty serious sell-off already, 250-point sell-off. So it's not going to help the Nasdaq. We're going to see lower price action this week. The level I'm really sort of looking to target is around about these previous swing lows from November, the 2 weeks, middle of November, 11,800, and I think we drew something on here as a measured move target from the head and shoulders formation. Let me see. Yeah, there we go. This is the head and shoulders formation, which we love these type of formations. They play out a lot more than other formations. And we had a retest of the neckline, and here we go, 11,600 it's got on here as the measured move target. So pretty negative on the Nasdaq. On the commodity side of things, as Joe said, oil, wow, just keeps on going, keeps on motoring. This is the weekly chart on oil, and we're not far away from the ABCD correction. I would say we've actually achieved it. And if we look at the other, let's get rid of the
something interesting I saw on the oil charts, on the intraday chart, Steve, you might see yourself, is when we've come in for the last 3 weeks, I think there's been a gap open to the upside on oil.
Yeah.
And every time it's filled. So there has been decent opportunities on that front.
Yeah. It's always it's always a bit nervy, isn't it, when it has a sort of gap open and it comes back to fill it. You sort of think, is that it? Is that the top? And then all of a sudden it's back up there and keeps having these retracement pullbacks filled. We can completely remove this head and shoulders formation. That one didn't play out. We got warning of that when we broke back above the right shoulder here, and obviously taking out the head there. But you can see how accelerated this move has been on the 4-hour side of things. The gap opened this morning, and we've got the high here at 66.24. The low today, 66.31. Not quite filled it. So still a little bit of potential. I think we'll get the fill out the way, and maybe this can kick on, because I can't really see much slowing the oil move down. Even with the dollar being strong, it's still sort of like finding these highs. So the dollar continues to motor higher by the looks of things. We can see the sort of the downside of that in gold. Obviously, gold's a bit of a different animal to oil. But they both benefit from the swings in the dollar. When dollar is weak, then both of these assets will be slightly higher. The weekly chart on gold, we're still in this channel formation. Let me just get this nicely drawn a bit better. So I mean, really, you've got to draw the line from here. It's taken out that side of things. We've got the resistance here. That's the sort of trend lower, and we're into this congestion area of around about 1660 to 1725, I think it is. So really, for me, a break below 1660, and I really think we could target this extended move down to 1445. A bit of a sort of scary situation for any gold longs in there. But it is it's obviously a safe haven. So if we do get a little bit of panic or macro issues anywhere, it'll be slightly supported by this. Silver seems to be holding up a little bit better. It's still been impacted. Obviously, we had this double top formation, which would play out if we get a break of 21.64, but that's $4 away. So can't see that happening anytime soon. But it's something to look out for. So yeah, I feel the precious metals are under pressure. What's happening with copper? Copper had a little bit of a pullback.
Maybe a flag forming there.
Yeah, we saw this sell-off, and that's the daily chart. It'll show it better on a 4-hour chart. And we had just a common ABCD correction. Let's draw it out.
Maybe even a complex head and shoulders.
Yeah,
that massive engulfing candle there into the cloud on the right hand side.
See that ABC correction, and then we got the move up lower, ran into resistance. Really big rejection here. That's a range of 405 to 417, a $12 range.
Notice the volume dipping off on that correction higher as well.
Yeah, we tend to see that. So the move up, the price action move up, but the volumes are moving down. So that's a sort of signs of a tentative rally, really, and potential for a reversal. So yeah, it's if we really, as Joe mentioned, the head and shoulders formation can be quite easily picked up. Quite complex one, but
a decent retest, a bit of an overshoot. But when you're looking at opportunities to trade, seeing that sort of volume sell off, seeing that massive reversal candle, that's your cue there, isn't it? The close of that candle, then
Yeah,
set your shorts, stops above the high,
yeah,
targeting a measured move, I guess.
yeah. I mean, if we look on the indices, we might have seen that on a few of the indices. Well, I mean, that is an evening star doji on the 4-hour chart on the
But
Ftse.
it's not a great example, is it, generally?
No, DAX, that's pretty good reversal signal. So potential for getting in here. But all of them bearish engulfing, bearish evening star on the Nasdaq, bearish engulfing, and a bearish evening star on the S&P as well. So they're all at it. And again, a great reversal candle in the Aussie 200. Nikkei, China. I mean, China's been really under pressure, and that continues. So there's no stopping that. Didn't even get the rally that everyone else got, maybe because of the time the markets opened. But yeah, all looks a little bit frantic, ready for a bit of a tough week for the indices, I think.
Yeah, let's wait and see. So flicking over to currencies then. First up, going to look at sort of overview as we often do with these currencies. Looking at the British pound first. That's in corrective mode at the moment. As you can see, we reached highs up here on the 24th of February, but have been dipping lower since. If we look at the risk currencies like the New Zealand dollar and the Aussie dollar, they've been more exaggerated on the downside as people sort of move away from these riskier assets and arguably making sort of new swing lows there on those currencies. If we look at the Swiss and the Japanese currency, they're often viewed as safe havens. So despite the sell-off in equities and the shunning of sort of riskier assets like the Aussie dollar and the New Zealand dollar, these are still failing to catch any bid, really. They continue to move lower, which is a bit odd. If we look at the euro, that's sort of in the middle of all of this, not really doing an awful lot. And then the Canadian dollar is probably one of the only ones that's alongside the US dollar that's actually performing quite well. Sort of, I guess quite range bound, but generally sort of ticking higher. And then finally, look at the US dollar, which really is going some at the moment. Another 0.25% higher this morning. So on a overview basis, you can see that the dollar really is leading the way on the currency side of things. So if you're looking for trade opportunities today, I think they've got to be centered around the dollar because that's clearly where the strong momentum is. If we take a look at that on a candlestick chart, I spoke about this level last week, the 91.60 level, and was looking for that to break out above that level in order to confirm this bottom pattern. And then we are looking for upside targets up towards 93.99 or 94.00, and then above that at 94.47, which is the 38.2% Fibonacci retracement level from these highs that we saw back in March last year down to these lows that we posted in early January. So it looks like the momentum is firmly with the dollar at the moment, and I'd be looking to buy dips on anything related to US dollars or and also looking maybe at the Swiss and the Japanese yen because they're clearly going in the opposite direction. So let's have a look at how that looks. We've got the dollar yen chart, clearly bullish momentum after a breakout of this wedge. In terms of where that could maybe stop, if we have a look at a fib level, maybe a 78.6, yeah, just overshot that. And the next level up, we've got an 88.6, which is less looked at 109.22. So the upside might be looking maybe a little bit limited on that at the moment. I'd like to think.
I've got 109. Looks like 109.20 on my weekly chart. I've got a great trend line in the
Show us quickly.
dollar yen.
Yeah, look at that.
Yeah,
You've got to think at some point, if we are seeing risk come off, surely there's going to be some money go back into the Swiss franc and the Japanese yen.
Yeah, So that I mean, what do you do? Do you wait for a reversal? Or you start to put on the position now. Really, if you're sensible, you'd wait for that sort of like initial reversal on the shorter term time frame to sort of highlight, oh yeah, here we go. This is because it's a pretty decent move up.
You don't want to see a break above that 109.85, do you? I mean,
no, I mean
even
a
little bit up there.
Yeah, even for me, this is 112.40 as well. That's like quite a serious. But again, it's just normal correction at the moment, isn't it?
Yeah.
It's not huge. So,
No.
but yeah, I think 109 for me, like 109, the big figure will be psychological. 109.10, obviously the trend line, and 109.85 previous swing highs when we had a little bit of a obviously event of some sort that during the weeks back in June.
Okay, let's look at Swiss US dollar Swiss franc as well. That's breaking out above a key resistance there at 92.96. So that would imply a move higher. Is that a sort of a cup and handle formation?
Yeah, it does look like it, doesn't it? And again, sort of like really, I've got 94, maybe 40 as a previous level of
trend line on that.
Well, sort of like it was a low reaction higher, low reaction higher, low reaction higher, low reaction higher. Broke through here, so it's a bit messy. But then when it did get through, it has sort of had a significant sort of resistance support use in the past. So 94.50 in front of the 95.
If we look at this fib level, got 38.2 coming in at 93.19, which is from those highs in March last year. Sorry, April last year, and it's just overshooting that at the moment. So clearly, you know, still some strong momentum. I guess we have to wait and see how that closes up today. If it closes above that, then I'll be looking maybe for a small pullback and another go again to the upside. And then the next target would probably be the 50% fib level, which is at 94.97. So into that sort of cluster of resistance that you mentioned, I guess. Yeah, quite interesting on the currencies then. Euro dollar. That's broken out of this channel and arguably formed a top. We are heading now towards this band of resistance that I've got, which is between 1.1500 and 1.1700. So quite a big band to target there, but we've got a number of levels that are all coming together. We've got the measured move of this top, we've got 38.2% and 50% fib, and we've got these swing lows here from September last year and November last year. So plenty to target on the downside for euro dollar, and I think that's probably still a case of selling rallies for now. Pretty much sums it up for the FX stuff. I'll leave it there for now. On the gun to the head challenge from last week, Steve, we had a short on cable and we had a short on the DAX. Unfortunately, you were stopped out on your trade, and my one wasn't overly exciting. 7 ticks offside at the 9 p.m. close when we shut these trades off, which equates to a 0.13R loss on the day. So yeah, just sort of hovering around the same sort of levels really, still struggling to sort of pick up any real momentum and get a series of winners behind us. But with the increase in volatility in certain areas of the market, maybe that will change and we'll actually get some decent follow through in a few of the markets that we're looking at over the coming week. Have you got anything that you're looking at, Steve?
Yeah, I would like to sell gold, but not at these levels. 16.95 is right mid-range as far as I'm concerned. I think we get a break of 16.87, sell a break there, or ideally, I'd like to sell it around 17.15, so a little bit higher. So that's really in the middle. So I'm not going to get involved with that. Oil is filling the gap now, so I might go for oil actually. I think as the US wakens up this afternoon, there'll probably be a few people thinking, aye, this is not bad. So 66.26, going to go get long there. Really target new highs and try and get a well, let's have a sort of like, if we have a reasonable stop. I always think like in oil, when you look at the ATR is 200, I always think a reasonable stop's around about 50 or 60 ticks. If I go 60 ticks, then I've got to really look for maybe a 180 on the upside, so 68.06. So that's not for any reason. It will be a new high. I think with these markets, as it's punching higher, once it takes out a new high, you normally get a little bit of follow through. So I'm getting long of oil at 66.26. This is WTI crude. Stop is at 65.66, and the target is at 68.06.
Lovely. I mean, from a technical perspective, that looks like the most obvious choice today. So I'm struggling to see beyond that. No, I can't. I've got to find something else. Let's have a look. Okay, I'm going to have a punt on euro sterling. When we looked at the overview, there wasn't an awful sort of lot that was great about either of the two markets on a sort of basket basis, but let's have a look at how this stands up. Okay, so got close to a 78.6. I mean, if we look at the daily chart on this first up, just to sort of put some context behind why I'm looking at this. Trading in a bearish channel, as you can see on the daily chart, but we did post this pretty decent looking hammer candle back on the 24th. So I'm hoping there's going to be some support and we're not going to breach to new lows on that one. And maybe we're in the sort of beginnings of a formation of a bottom. So if that's going to happen, it needs to happen now. So I'm going to buy it at 85.95. Going to place a stop loss of 40 ticks. Not great. There's a bunch of resistance around there, so I'm going to go for 86.60. So I'm going to have to tighten that right up. Let's go 85.72, 3 to 1. So into these kind of resistance levels around here, just ahead in front of that. And a stop loss just below the 78.6%. So it's not a specific level as such from a price action perspective, just using a Fibonacci level on that today. Let's see how it goes. Not overly convinced. They tend to be the ones that work.
Yeah, exactly.
Okay, there's not much data out today. We are expecting some commentary out with regards to the $1.9 trillion stimulus package in the US. So that's likely to dominate focus today. And then after that, we've just got the Meghan and Harry interview to look forward to. Will you be watching that, Steve?
It'll be definitely more entertaining than watching Liverpool play football.
Yeah, I didn't want to bring that up today.
No, I don't mind you bringing it up, mate. They can't buy a goal at the moment, can they?
No, they can't.
And even their strikers are sort of giving the goals away. So really, really sort of painful to watch. I do feel like a West Ham fan.
Let's focus on Meghan and Harry then, shall we?
Yeah, Meghan and Harry. Yeah, that should entertain us for a short while. It's almost like waiting for Boris to speak, isn't it?
Yeah, it's going to be more entertaining, I think. I'm going to have my Twitter feed up and just watching all the comments coming out on it. I think that'll be where the most entertainment is, just seeing people's views on it and so how polarizing it will be. But yeah, we'll see.
Yeah, I'd like to know a little bit more about it. I haven't paid enough attention to it. Maybe I'm a bit distracted by the things that really matter in life.
Exactly.
All the royals out there, all the royal followers will be jumping up and down and shouting and throwing things at the screen now. But
yeah, there's not many of them left, I don't think. Okay, right, let's wrap it up for the day then, Steve. Have a great day, and everybody that's watching, and we'll be back tomorrow morning.
Cheers, pal.
Cheers, bye.